Welcome back. We are still in RA 9298, the Philippine Accountancy Act of 2004, and we are now ready to answer some multiple choice questions pertaining to RA 9298. So, if you have not yet watched the video where we did a review of the salient concepts of this particular Republic Act, now may be a good time for you to do that. And if you have already done so, then let's answer some multiple choice questions. Number one. The following statements relate to the term of office of the chairperson and the members of the Board of Accountancy. We are going to look for the false statement. Letter A would say no person who has served two successive complete terms as chairman or member shall be eligible for reappointment until the lapse of 2 years. So this one right here is talking about the resting period in between two successive complete terms. And if you must remember, actually the resting period is only 1 year. And so, as early as the first choice, letter A, we're already able to identify that this is the false statement. So, if you would recall, like what we have mentioned previously in our review, after two complete terms, remember that it has to be after two complete terms, then there shall be a resting period of 1 year. Letter B is true in that appointment to fill up on an expired term is not considered as a complete term. Letter C is also true in that the term of office is actually 3 years and that any vacancy occurring within the term of a member shall be filled up for the unexpired portion of the term only. So our false statement here is alpha. Number two, we're going to evaluate the statements and determine if they're true or false. Statement one, to be qualified as having passed the licensure examination for accountants, a candidate must obtain a general average of 75% with no grades lower than 65% in any given subject. And statement one is true. This is exactly how the Philippine Accountancy Act defines a passed examinee, right? Statement two, a candidate with conditional credits must take a removal examination within 3 years from the date of the preceding examination. In this case, statement number two is actually false because in the case of conditioned examinations, the candidate is given 2 years in order to remove the exams in which the candidate is conditioned for. So the answer here is letter B. That's true for statement one and false for statement number two. Moving forward to question number three, which of the following statements concerning the issuance of the certificates of registration and the professional identification cards to successful examinees is correct? Letter A, the certificate of registration issued to successful examinees is renewable every 3 years, and actually, letter A is a false statement. Remember what we said previously that the certificate of registration is kind of like your birth certificate, where you are given birth into the profession. So the certificate of registration actually does not expire, making letter A an incorrect statement. Letter B, the professional identification card issued to successful examinees shall remain in full force and effect until withdrawn, suspended, or revoked in accordance with RA 9298. And letter B is also an incorrect statement because the professional identification card is renewable every 3 years. Letter B then is not the answer. Letter C, the Board of Accountancy may, after the expiration of 3 years from the date of revocation of the certificate of registration, reinstate the validity of a revoked COR. And for this, we are reminded that in case of revocation, while the cause or the reason for the revocation is owing to a more severe condition than that of a simple suspension, a revocation is actually not permanent, right? The Board of Accountancy may, after the expiration of 2 years. Sorry, that should be 2 years, not 3 years. We are saying revocation is not permanent. They may be reinstated, but the reinstatement is also not automatic. Okay, therefore, letter C is also an incorrect statement, leaving us with the only remaining statement, and this must be the correct statement. And the answer, letter D, the BOA shall not register and issue a certificate of registration and professional identification card to any successful examinee of unsound mind. And this is, of course, correct. We are reminded of the grounds for refusal to issue the certificate of registration and the PRC ID. Remember the mnemonic ICU in case of immoral or dishonorable conduct, conviction of crimes involving moral turpitude, and of course, unsound mind. So delta for number three. Yes. It would seem like choices A and B are have actually interchanged the validities. For example, the certificate of registration is actually will actually remain in full force until withdrawn, suspended, or revoked, and the professional ID card is renewable every 3 years. So, moving on to question number four, the following documents shall be submitted by applicants for the CPA licensure examination except. We do have to make a little bit of reflection here, especially if you're planning to file for the CIPALE anytime soon. Would you need your transcript of records with indication therein of date of graduation and special order number unless it is not required, such as in the case of schools which are granted autonomous status? So letter A is true. You will be submitting your TOR. Letter B, certificate of live birth in National Statistics Office security paper. And yes, you will also need to submit your birth certificate in NSO security paper. So letter B is a yes. Now, if you would recall, one of the requirements or qualifications for those who will take the CEPALE is that one must have good moral character. And so with that, you will also be submitting an NBI clearance. Okay, so letter C is also yes. What is not required, since we're looking for the exception, is actually letter D, marriage certificate in NSO security paper for married male applicants. In the case of married applicants, a marriage certificate is a requirement. It must be submitted in the case of married female applicants. Since female applicants normally take the surnames of their husbands, so they do need to submit a marriage contract. But this is only true for married female applicants. Thereby, letter D is the exception. So delta for number four. Okay, next. All graduates with a bachelor's degree major in accounting. So these are those maybe titas or titos or friends or acquaintances who graduated Bachelor of Science in Commerce major in accounting. They shall be allowed to take the CPA licensure examination within how many years from the effectivity of RA 9298 under the rules and regulations to be promulgated by the Board of Accountancy subject to the approval by the PRC. Do you remember the portal when we had our review of the salient provisions? We mentioned that there is some kind of like a portal for as long as they were able to take the CEPALE. They were able to enter the portal as of that date, and that was actually May 2006 because our RA 9298 became effective in May 2004. So effectively, that would be 2 years. So they have to take the CEPALE within 2 years from the effectivity of RA 9298. Take note that the provision is only for them to take the CEPALE within 2 years, not necessarily to pass the CEPALE. Okay, so taking it will be enough. So bravo for number five. Next, let's take a look at question number six. The following are qualifications of the members of the Board of Accountancy except. Letter A, they must not have any direct, so no direct or indirect pecuniary interest in any school, college, university, or institution conferring the BS Accountancy degree or providing CPA review classes. Letter B, duly registered CPA with at least 3 years of meaningful experience in any scope of practice of accountancy. Letter C, good moral character, not convicted of crimes involving moral turpitude. And letter D, natural born citizen and resident of the Philippines. Okay, so of the four, the incorrect qualification is actually letter B, bravo, because the qualification is that they must be duly registered CPAs with at least 10 years of meaningful work experience in any scope of practice. We just remember that in the case of the Board of Accountancy, the requirements are stricter. Not only must they be natural born, but their years of experience must be at a minimum 10. Now, the 3 years meaningful work experience might be something that you have already encountered as one of the requirements, but this is being invoked in terms of requirements for accreditation. Should you wish to be accredited to practice public accountancy, or should you wish to be accredited to be an accounting educator, the requirement is at least 3 years of meaningful work experience. But here we are talking about members of the Board of Accountancy, so the requirements are stricter. They must have at least 10 years in any scope of practice. Okay, so let's move forward to the next question, number 7. This act provides that only licensed professionals may teach licensure subjects and provides for the triennial renewal of the professional identification card. So, which particular act requires that licensed professionals may teach, or only licensed professionals may teach licensure subjects? Is it letter A, PD 1081? Letter B, RA 9298. Letter C, the IRR of RA 9298. Or letter D, the PRC Modernization Act. Do take note that this question refers to licensed professionals and licensure subjects in general. There are so many other licensed professionals, not only CPAs, and there are many other licensure subjects, not only from the CEPALE. So this one definitely cannot be sourced from RA 9298 because RA 9298 is very specific to the accountancy profession. So we could already effectively eliminate Bravo and Charlie. Again, the question is on a more generic scale, but RA 9298 is specific to accountancy only. So not Bravo, not Charlie. We're left with Alpha and Delta. Is it PD 1081 or the PRC Modernization Act? PD 1081 is the presidential decree upon the declaration of martial law in the Philippines. So this cannot be the act that provides for licensed professionals teaching licensure subjects. So therefore, the answer to this one is Delta, the PRC Modernization Act. Number 8, Section 34 of the IRR of RA 9298 provides that foreign CPAs shall not be allowed to practice accountancy in the Philippines unless they can prove, in the manner provided by the rules of court, by specific provision of law, the country of which they are a citizen, subject, or national admits Filipino citizens to the practice of the same profession without restriction. This precisely right here is at the very heart of what we call foreign reciprocity. As what we have previously mentioned, when you talk about reciprocity, it must be specified by a provision of law. So, which of the following statements do we have here from Alpha to Delta is incorrect regarding foreign reciprocity? So we are on the lookout for the incorrect statement. Letter A, by express provision of the law of a foreign CPA's country or state, Filipino CPAs are allowed to practice accountancy in their country or state in terms of strict and absolute equality with the citizens and subjects of said country or state. Letter A is a correct statement about foreign reciprocity. This means that they are treated as equals. The licenses of our Filipino CPAs are treated as equal to the licenses of the CPAs in their own country. So alpha is a correct statement. Therefore, cannot be the answer because we're looking for the incorrect one. Letter B, a foreign CPA who desires to practice accountancy in the Philippines shall present and submit a letter or any document signed under official seal by the appropriate official of his or her country or state requesting the chairman of the PRC to allow him or her to practice accountancy in the Philippines. And actually, in this case, Bravo is the incorrect statement because when we talk about reciprocity, it has to be done by virtue of a specific provision of law. It cannot be made by a mere request for an individual consideration. Okay, so Bravo then is the incorrect statement. This simply means that letter C, a foreign CPA should submit an authentic or authenticated copy of the law on reciprocity of his or her country or state officially translated in the English language is correct. This is a requirement. And delta, if the letter or document and the copy of the law submitted by a foreign CPA are satisfactory to the Board of Accountancy, they shall be allowed to practice accountancy in the Philippines, but has to apply for accreditation to do so. And this is also correct. Remember, they are to be treated as equals. So if our Filipino CPAs have to apply for accreditation to practice public accountancy in their own country, more so should these foreign CPAs, because they're supposed to be held as equals. So whatever applies to our Filipino CPAs must also be applied to these foreign CPAs in the context of reciprocity. So the incorrect statement here is bravo. Number 9. Below are the names of three CPA firms and pertinent facts relative to each firm. Unless otherwise indicated, the individuals named are CPAs and are partners, and there are no other partners. Which of these indicates a violation of the IRR of RA 9298? So letter A, K and L CPAs. K died 3 years ago. L was admitted into the partnership 2 months after K's death. So in this case, they initially started as a partnership, K and L, but then K died. But when K died, L actually admitted somebody else, okay, into the partnership. And so therefore, the structure is partnership to partnership. So in this case, there is no required number of years for them to change the name, right? Letter B, DE CPAs, the name of F, a third active partner, is omitted from the firm name, and this is perfectly fine. There is no requirement that all partners will be named. Otherwise, can you imagine the big firms? If they will have to name all of their partners, their names will be very lengthy. So there is no requirement to name all of the partners. Letter B is just fine. That's okay. That's acceptable. Letter C, A, B, and C CPAs. A died 7 years ago. B and C are continuing the firm. So again, in the case of letter C, it's partnership to partnership. Even when A died, the structure of that being a partnership has been retained. So similar to letter A, because the structure or the change is from partnership to partnership, there is actually no need to observe a certain number of years to change the name. Letter D, GHCPA's G died 3 years ago, and in this instance, H is continuing the firm as a sole proprietor. This is now where we invoke the prescribed moving on period as given by RA 9298. In this case, the sole proprietorship must rename within 2 years. So since G died 3 years ago already, then letter D is already a violation. H should have renamed the sole proprietorship already in order to reflect the fact that H is going solo. Okay, so letter D is the violation because it has already gone over and beyond the 2 year prescribed moving on period. So delta for number 9. Okay, moving on to number 10, a person is deemed to be in the practice of accounting profession in commerce and industry when so remember, if it's commerce and industry, it should be referring to employer-employee relationship. If it's public practice, it will refer to clients. So letter A, is in an educational institution which involves the teaching of accounting, auditing, management advisory services, accounting aspects of finance, business law, taxation, and other technically related subjects. Letter A actually refers to a CPA in the academe or in education. Letter B, holds or is appointed to a position in an accounting or professional group in a government or a government owned or controlled corporation where decision making requires professional knowledge in the science of accounting. And letter B refers to a CPA in the government. Letter C, holds out himself as one skilled in the knowledge, science, and practice of accounting and as someone qualified to render professional services as a CPA. Let's park that to the side. Letter D is involved in decision making requiring professional knowledge in the science of accounting as well as the accounting aspects of finance and taxation, or is employed in a position that requires a CPA. Letter D is actually the one that refers to commerce and industry. Letter C is the one that refers to a professional accountant. So since we're talking about commerce and industry, again, a reference to the employment, employer-employee relationship. So delta for number 10. Moving on to number 11, we have a lot of blanks to fill. The blank, upon recommendation of the blank, shall within blank days from the effectivity of the IRR create an accounting standard setting council known as blank and an auditing standard setting council, body to be known as blank. So I think the first two blanks that we can fill out here is what is the accounting standard setting body? The accounting standard setting body as outlined in RA 9298 is actually the FRSC, Financial Reporting Standards Council. Now we know by virtue of a BOA resolution that has been renamed to FSRSC, right? But if you look at the RA itself, it has still outlined or laid out there that it is the FRSC. So we're referring to the original name as we are invoking the provision of the RA. So that makes it FRSC. That means our answer is either alpha or delta. We now take a look at what is the auditing standard setting body, and we know that one to be the Auditing and Assurance Standards Council, which is actually the same in alpha and delta. So it's still either alpha or delta. Okay. So the question now is, who creates the standard setting body? Because the blank, upon recommendation of the blank, shall within blank days create a standard setting council. So basically, the blank creates as an accounting standard setting council. Who creates the standard setting councils? Is it the president or is it the commission? And when we talk about the commission, we're actually referring to the PRC or the Professional Regulation Commission. So is it the President of the Philippines or is it the PRC? The answer to this one is it is actually the PRC. So the PRC, upon recommendation of the BOA, shall within 90 days from the effectivity of the IRR create the FRSC and the AASC. Okay, so do take note that when you talk about the Board of Accountancy, if it's the Board of Accountancy, it will be the president upon recommendation of the PRC, okay, who will appoint the members of the Board of Accountancy. But in this case, we're already referring to the standard setting councils. So for the standard setting councils, we will not bother the president anymore with that. Okay, rather it will be the PRC upon recommendation of the Board of Accountancy. So the answer to number 11 is delta. Let us now go to number 12. What do you call a study, appraisal, or review by the board or its duly authorized representatives of the quality of audit of financial statements through a review of the quality control measures instituted by a CPAs or by CPAs engaged in the practice of public accountancy to ascertain their compliance with prescribed professional, ethical, and technical standards of public practice. This one somehow kind of answers the question of if the auditor audits the work of the accountants, who audits the work of the auditor? And this essentially is done by virtue of what we call a quality review. That is why in our RA 9298, they have created what is called as the QRC or the Quality Review Committee. Okay, of course, now in the recent years, they have been called as the QARO, Quality Assurance Review Office. Okay, but if you look at the text of RA 9298, that was initially referred to as the QRC. Okay, so this is what we call as quality review. Number 13, ABC Company is a business in the private sector. The company has several administrative positions that require, among others, number one, the supervision and recording of financial transactions. Number two, the preparation of financial statements. And number three, coordination with the external auditors for the audit of financial statements and other related functions. Suppose that these positions are currently occupied by non-CPAs. Will the effectivity of the IRR displace the incumbents to these positions? We also invoke that there is a rule in the RA 9298 That for establishments where we have the 5 million, 10 million rule, 5 million in paid up capital, 10 million in annual revenues, then this position must be occupied by certified public accountants. That is what we will find in RA 9298. But what if prior to the effectivity of RA 9298, this position has been occupied by non-CPAs? Will the effectivity of the IRR displace, remove the incumbents to these positions? Letter A, no, the IRR specifically provides that the provision shall not result to the deprivation of employment of incumbents to the position. Or letter B, yes, the non-CPAs will be terminated provided equitable benefits are available for them and resulting vacancies will be filled in by CPAs. Or letter C, yes, unless the non-CPAs are able to take and pass the CPA board examinations within 2 years from the effectivity of the IRR of RA 9298. Or letter D, cannot be determined without additional information. Actually, if you look at the penal and final provisions of RA 9298 and its IRR, they have actually placed a protection upon the incumbents. So therefore, no, the IRR specifically provides that it will not result to deprivation of employment. Similarly, if there are CPAs, which there are, similarly for CPAs who are already CPAs upon the effectivity of the IRR and RA 9298, they were also not required to retake the board exams, right? So even if a new law has taken into effect, they are not required to retake the examinations. Their licenses are still being recognized. Okay, so similar to this, if they are incumbents to the position, they should not be deprived of their employment by virtue of the IRR implementation. So, alpha for number 13. Number 14, another council created in RA 9298 is actually the Education Technical Council. And I think we could already envision what their role is. Okay, it's to monitor the educational institutions offering the accountancy program to ensure, of course, a high level of education. But the question in number 14 is, what is the composition of the ETC? Now, the ETC actually has the same composition as the Board of Accountancy. That means 7 members with a chairperson. And the chairperson must either be currently or has been of a senior position, occupying a senior position in the Academe. So that's the ETC. Similar composition as the Board of Accountancy. Okay, so and this is the breakdown of the composition of the ETC. One from BOA, and then from the accredited, from the AIPO, from PICPA, we'll be having one from public practice, one from commerce and industry, two from the academe, and of course, one from the government. Okay, so making it a total of 6 members plus one chairperson. And again, the chairperson must have been or presently a senior accounting practitioner in academe. Let's take a look at number 15. Base case CPA is the Dean of the College of Accountancy in the University of Mara. Related to this, which of the following statements is incorrect? Incorrect. Letter A, base is considered to be in the practice of the profession. Letter B, base is practicing accountancy in the education sector, the academe. Letter C, base is not considered in the practice of the profession because they occupy an administrative position, because basically base case is the dean, okay, not a faculty. Letter D, the position of the dean or the department chair or its equivalent that supervises the BS accountancy program of an educational institution must be a duly registered CPA. The incorrect statement, of course, is letter C. Even if base is acting in an administrative position, but the administrative position is that of a dean, and the dean or this particular deanship supervises the College of Accountancy. Okay, we invoke then choice D, which says that the position of the dean or the department chair or its equivalent. I'd like to go back to that. The position of the dean or the department chair or its equivalent. Meaning to say, it is possible if the dean is not a CPA, but the program chair or the department chair must be. Okay, so dean or department chair or equivalent must be a duly registered certified public accountant. So Charlie for number 15. Number 16, which of the following statements is correct? So we're looking for the correct statement. Letter A, the examination in which the candidate was conditioned and the removal examination on the subject which he or she failed shall be counted as two complete examinations. And to letter A, we say this is not correct. Not correct because the examination in which the candidate was conditioned and the removal examination will only be counted as one complete examination, right? So the first exam where they got a condition rating plus the removal exam, so together they are counted as one complete exam. So letter A is incorrect. Letter B. Any candidate who fails in two complete CPA board examinations will no longer be allowed to take another set of examinations. And we say not true because if a candidate has failed in two complete CPA board exams, the candidate simply has to enroll and complete a refresher course. And once the refresher course is completed, the examinee may again take the licensure exams. Letter C. Any candidate who fails in two complete CPA board examinations shall be disqualified from taking another set of examinations unless they submit evidence to the satisfaction of the board that they have enrolled in and completed at least 24 units of the subjects given in the licensure examination. Letter C is the correct statement. This one now refers to our refresher course of 24 units. Letter D, the refresher course should be completed within 2 years from the preceding examination. Not true. The 2 year requirement refers to the conditioned candidate. So the conditioned candidate must take the removal exam within 2 years from the preceding examination. Another 2 year rule that maybe we could recall from this number is the validity of the TOR. So once completed, the TOR will have a validity of 2 years, but there is no requirement for the refresher course to be completed within 2 years. As soon as the TOR is released, then that's the time that the TOR gets a validity of 2 years. So the answer to this is Charlie. Number 17, the following statements relate to the practice of public accountancy. We are looking for the correct statement. Which one is the correct statement? Letter A, the Securities and Exchange Commission shall not register any corporation organized for the practice of accountancy, public accountancy, and it's true. It may be a single practitioner, a firm, or a partnership, but currently, based on the provisions of RA 9298, a corporate setup is not allowed. So letter A is true. Letter B, single practitioners and partners of partnerships organized for the practice of public accountancy shall be registered CPAs in the Philippines, of course. So letter B is true. We're talking about single practitioners and partners. Definitely, they must be CPAs as they will be the ones signing the audit report. Letter C, a partnership engaged in the practice of public accountancy may be carried on in the form of a general partnership or a limited liability partnership organized in accordance with the Philippine laws. Letter C is also true. So all of the three choices are true. Moving on to number 18, statement 1, a BSA graduate is allowed to practice accountancy under their own name immediately upon passing the CPA board exams. Can you already sign audit reports immediately upon passing the CPA board exams? The answer is no. Those who will be practicing accountancy, referring to public practice, of course, will need to have to be accredited. And to be accredited, you need to have at least 3 years meaningful experience. This is what is meant by practice accountancy under their own name. Okay, so statement 1 is false. Statement 2, the certificate of accreditation to practice public accountancy is granted only once and remains in effect until withdrawn, suspended, or revoked in accordance with RA 9298. Statement 2 is also false. It is not the certificate of accreditation that is granted only once, rather, it is the certificate of registration. So, the certificate of registration is the one that is granted only once, it does not expire. The certificate of accreditation still expires. Okay, the validity of a certificate of accreditation is 3 years, just like your PRC ID. So, in this case, the answer is Charlie, false and false. Number 19, we're talking about the vice chairman of the Board of Accountancy. They shall elect a vice chair with a term of, and the vice chair has a term of 1 year. Now, be very careful about this one. The term of the vice chair as a vice chair is 1 year, but the term of the vice chair as a member of the BOA, because in the end, when the vice chair steps down from the vice chairmanship, the position of the vice chair reverts to being that of a member. So the total term of this person is still 3 years. Okay, so if ever they are elected as vice chair, they will sit as vice chair for 1 year and will revert to member status for the remaining 2 years. Okay, so the 1 year term is only for the position of vice chair. Number 20, monitoring the compliance with CPD requirements is done by the PRC CPD Council. This is another council created by RA 9298. Actually, in RA 9298, this was still referred to as the CPE Council, Continuing Professional Education. But by virtue of a BOA resolution, this has been changed to CPD. Okay, that's Continuing Professional Development. And RA 9298 created a council for this one. And the composition of the council is a chairperson and two members. So in this case, this three-person council is actually made up of somebody from the Board of Accountancy, and then the national president of the AIPO, which is PICPA, and then the president of an association of schools and educational institutions. What is unique about the PRC CPD Council is that their term is is that they observe coterminous status with whatever original term they are holding. Meaning to say, for that member of the CPD Council who is from BOA, then for as long as they are a member of BOA, they will also be a member of the CPD Council. So the moment that they're no longer a member of BOA, they will be replaced in the CPD Council. For the national president of the AIPO, PICPA, for as long as they are president, then they will be part of the CPD Council. If they are no longer president, then they will also be replaced by whoever is the sitting president. So coterminous, okay, coterminous to their original positions. So that's a chairperson and two members, making it a total of three. Now, actually, I have prepared, and this is the specific provision found in RA 9298 for the CPD Council. Now, actually, I have prepared a total of 45 questions for you, and we have just effectively practiced on the first 20. So we're going to take a very quick pit stop right here. We're going to stop our video right here. And in the next video, we will continue with questions 21 to 45. So thank you so much for joining me for the first 20 questions, and see you on the next one.